So starting off with the S&P 500 on the left and the Nasdaq on the right, looking at the daily time frame. So picking up where we left off, last night. So we highlighted this S&T here, or this crack correlation here between the S&P and the Nasdaq, where the S&P took out this high right here, creating higher highs, whilst the Nasdaq did not take out these highs here, creating a lower high, creating just a regular, SMT. Now, the reason why we highlighted this SMT is because there was quite literally nothing else here. After observing how the Monday and Tuesday daily candle closed out, there was no cracking correlation down here. There was nothing on a lower time frame chart, so we were kind of left with nothing, right? Very bare bones price action. And this was really the only thing that we had tipping its hand. And this led us to believe that price action would, continue delivering lower. But we had to keep in mind about Donald Trump speaking early in the morning this morning, because that can throw everything off in terms of analysis, which is exactly what you saw today. So as we can see here, on today's daily candle being Wednesday, price retraced back inside of the current new week opening gap. So if you don't know what the new week opening gap is, the new week opening gap is from Friday candle, so the Friday daily candle, from that candle's close to the first daily candle of the week. In this instance, it would be Tuesday, but technically it's Sunday/Monday price action, but to the first daily candle open. So from Friday's candle close to Monday's or Tuesday's open, right? Just as you can see right here. And if you don't know about new week opening gaps, price tends to revolve around these right here. And it doesn't let gaps like this remain unfilled. Right, somebody mentioned a question earlier about this gap in last night's live stream. I said, what's likely to happen is we'll return to it just at a later date and not right now. But manual intervention had other plans. Now, where we currently sit in terms of price is we have our buy side liquidity up here and our sell side liquidity down here. So we're playing back within the range. Now, Jacob, how do you know when to go on defense mode? How do you know whenever price isn't likely to be one-sided? How do you know to, play within the range? Well, as we can see here, this is our established range. And this has been our established range for a little while now, right? But if we take from this high here to this low and extend this out in time, we take from this high here to this low, notice of how price is trading near the midpoint. So this is equilibrium right here, right? That's what this is called. So from this candle's high to this candle's low, so from range high to range low, the middle of that is equilibrium. If we have price, kind of lingering around here and revolving around here, that calls for low probability conditions, right? Even if there is a cracking correlation up here, price drops, sells off a little bit, trades right back within the range, and then kind of hangs around equilibrium. That is the telltale sign for low probability conditions. And you've heard me say this for the past about a week and a half now, and this is not uncommon for the month of January. Right? Keep in mind there's still 11 months after the month of January, and we'll have a lot bigger and better opportunity later in the year. But January is still, the market settling into things coming into the new year. So seeing price action like this shouldn't, scare you. It shouldn't make you think that opportunity is extremely, extremely scarce and, trading is never going to work out. It's never going to happen for you, because what's happening right now is difficult. It just means that you have to learn to play defense. And times like this make very, very good for exercising your patience and discipline, and especially risk management, right? Think about what we said last night. If you are to do something, it's best to either A, lower risk, or two, just be extremely, extremely patient, because these are the conditions where you will be tested. And something like this is going to happen again in the future, and it's going to happen again after that, and it's going to happen again after that. So instead of blaming the market and being like, this sucks, why can't market just do what I want it to do, you got to think in terms of, how can I position myself to where things like this can't hurt me. So is everybody clear on where we stand in the higher time frame? Perfect. Now, just because we were technically quote unquote wrong about the daily bias for today and wanting to see this low get delivered doesn't mean you weren't right on a trade, or that we weren't right on a trade. And if you guys keep up in the indices channel, you guys saw a trade that I posted that I took personally. So going from the daily chart to the 1 hour, as you guys know, we wanted to come into the day being bearish. And looking on a lower time frame, right? This down here, this entire quarter is on the weekly cycle, Q3, so Wednesday, right? As we can see here, Tuesday closed lower and left a fair value gap right here. Right? Wednesday opened up, right? Traded higher into the gap, and then broke lower, taking out this low right here. So is this a setup in the direction that we anticipated price to draw towards? Yes. Were we correct about the daily bias though, where the entire day was trying to project to? No. So in trading, you can be wrong, but still be right, right? As long as you follow the correct protocols and procedures, which things like this, you'll learn. You'll be able to see things just like this ahead of time. And some of the 2025 people even took this exact same trade. Now, what makes this trade a high probability? Well, number one, we came into the day in bearish, right? So we already have a predefined direction, right? We already wanted to see price draw lower. And number two, we had a key level, right? Now, what constitutes a key level? Because so many people get very worked up and confused about, well, what does a key level mean? How do I identify a key level? In short, a key level is just a PD array that you use. That's all it is. Nothing more, nothing less. It's a PD array backing up, how far you expect price to retrace until it ends up continuing in your anticipated direction, right? That's all it is. So here, this 1 hour gap, this is the key level, and it is a bearish fair value gap, right? So we have a key level supporting the bias. Number three, what is special about these lows right here? They're unsymmetrical. So unsymmetrical. So yes, while our target was, resting way below market price, in the short term, we have these lows right here, these unsymmetrical lows. And these make for an amazing, amazing short-term target. If you're ever trading, and this goes for day trading, this goes for scalping, this goes for trying to catch the entire weekly expansion. If you ever have this, exact setup right here where you have a key level in alignment with direction and resting at the low or at the lows, where the key level is, and this is vice versa for if it's bullish. You have unsymmetrical lows there, So we have key level, unsymmetrical lows, price retraces into the key level, and then continues expanding. This is a phenomenal, phenomenal area to either one, take partials, two, roll the stop into, or three, close the trade altogether, which is what you saw me do today. So whenever you have these, simple things in alignment right here, this is how you can be wrong about the day, but still be right in terms of turning a profit. Now, we're going to discuss how could you have known to close the trade at these lows? How could you have known not to, want to continue holding on to it and expect news to be a distribution? Well, if we look at the 9 o'clock hour, Trump began speaking at about 8:30, but things didn't really kick off until the 9 o'clock hour. We can see the 9 o'clock hour completely reversed, right? Everything that had to do in terms of price. So seeing something like this right here, if you ever see somebody speaking that usually doesn't speak, or you see something out of the ordinary and it has a timed schedule. So you can see it on the economic calendar. It's not something that usually happens. That is how you can see ahead of time this thing called manual intervention. And manual intervention, if you don't know, is this thing that occurs where it doesn't matter what analysis you have, right? The market doesn't care what analysis you have. Real world factors will and can affect the market. So today, for instance, right, there was news with a trade deal, I believe, with Europe and the US, and that, is what caused the market to completely reverse and do what it did. Now, there's, excuse me, but trying to predict that ahead of time, trying to predict geopolitical news, yes, you can put together your own opinion and form your own opinion about what's going to happen or so on and so forth. But at the end of the day, nobody truly knows unless it comes time that the news comes out, right? So if you ever have a setup ahead of time, before you anticipate manual intervention, and you have unsymmetrical lows, or you have a target, or you have something along the lines of that you're working with, that's when you want to either one, collapse the trade, or two, take a very, 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 very good portion of the trade off. Because like I said, right at 9 o'clock, whenever Trump started speaking, things went haywire and the market completely reversed without any real reasoning, right? Keep in mind, there was zero reasoning supporting why price should have drawn higher. It just, boom. In that 9 o'clock hour, somebody says something or somebody says the wrong thing, and that's that. If you're on side, amazing. If you're not, might not be too good of a day. And as we can see, later in the day, price retraced, and then in the afternoon, a large expansion higher again. But keep in mind, like I said, there was no reasoning for this, right? The only reasoning why price did this right here is because of outside sources that aren't directly correlated to price action. So does that make sense? So what's 3 things that you learned from this live stream? I'm going to start doing that. At the end of each stream, I'm going to start asking you guys 3 things that you learned. Your Wi-Fi sucks. I think we'll blame it on the ghost. Narrative key level, unsymmetrical lows or highs, high probability. Exactly. Be mindful of unplanned news events. Yep. Trump news events, and specifically, 100%. That guy's unpredictable. So can we use the 1 hour gap like the 4 hour gap? Yes. But something that you'll see is that 1 hour gap was also in confluence with a 4 hour gap. Manual intervention, you can have a wrong bias but still take a winning trade. Whenever we're having new week opening gaps, look for price to fill it. Yes. Unsymmetrical high or low can be used within quarter or just in general. Yep. So going into tomorrow, we're looking for a continuation higher to make the high of the week. Is final GDP red folder explosive? Not usually. But tomorrow we'll treat it as an if then. Tomorrow's going to be one of those if then days where we have to wait for information from London session and then we can make a decision. Yeah, this is not easy price action. And of course, you're going to see everybody on social media, say, "Oh, this is so easy. How did you not see this buying opportunity right here?" You're always going to see things like that. Things that come, out of nowhere. You're always going to see people posting online about, "Oh, look at this. I got it in the Trump move." But you'll never see the 20 trades they took prior to that where, they almost blew their entire accounts. Can you repeat the key level part? What was special about that 1 hour gap? So this 1 hour gap is in confluence with the 4 hour gap and in confluence with a 6 hour gap. And whenever it comes time for sequential gaps, we'll talk about that. Why do you choose the 1 hour fair value gap and not more higher time frame? I think I just answered that. When a gap is like this, do you set up an alert and wake up to place a trade? When do you sleep? Put a limit order inside of there, and then have a stop loss allocating for that. And then that's that. Let the trade hit while I'm asleep. I mean, I literally woke up and then closed the trade. If you look in the indices channel, I didn't close it as it hit this low. I closed it during this candle here because this is the time that I woke up. Did you take the buys also, and was the buy a valid trade? Thing is about the buys, there was no reasoning supporting why price should have gone higher. Only reason it did go higher is because news, real world economic news, suggested for higher prices. But there would have been no way in seeing that ahead of time, unless you're working with the all-knowing people. You can be wrong in your higher time frame analysis, but still be profitable. Once the unsymmetrical lows gets taken out, you take off a good portion of your position, remove your stop loss. Exactly. I was bullish all night and got chopped up for it. Then it played out later. Yep. And if you're an intraday trader, that's why it's important that only stick to the morning session. But short term wise, and in terms of the weekly range, there is nothing supporting bullish price action, in my humble opinion. Would requiring a divergence with the 1 hour, 4 hour gap be overkill or valid stricter rules? So there was a session cycle sequential SMT. You can have a have an SMT inside of a gap if you want to. It would make it higher probability, but it would also increase the chance of you missing the trade. 4-hour TPD played well, but just the fair value gap. Do you pre-shot with OCO order? Not sure what an OCO order is. Was thinking today about this position, but I gave it up after yesterday's words that we'd only know something today, so I didn't take advantage of it. I'm glad that my predictions came true. And see, things like this is going to be more important than you taking the winning trade. Because you anticipate something in the market, right? And I didn't highlight this out, right? Because we haven't really talked about this setup in particular, and there's a lot more behind the scenes, right? 2025 understands there's a lot more behind the scenes to this setup, but you were able to see something that I didn't call out, right? Plan for it, have an expectation of, I want to see a draw here, and then I want to see a draw here, right? And then watch it play out. That is amazing. And then the next time you see something like this roll around, you'll jump on it. Because just watching it play out, there was no inherent expectation of it needing to play out. Right, you just watched and sat on the sidelines. Sequential gaps, multiple time frame gaps being one. Nope. Is it true? Triad and dyad revolve together? I have no idea what that is. Anyone want to take one for the team and get in the office and get us insider trading? Where do you put your stop loss to not have bad risk reward? We'll teach that later on. One cancels out another. Stop loss and TP attached to limit order only if limit order, stop loss, and TP are placed. No, I don't do that. I just, place the order and place the limit and hope for the best. Now, typically what ends up happening is Asia session or very, very early London session will hit the entry, and then I'll place the limit order after for the target. But, in certain situations like this, like I didn't have a limit order down here, right? I set the limit order for the entry and then had the stop loss, right? And then I was going to wake up and close it if it were to get down here. The reason why I didn't put the the take profit on is just in case it wanted to draw lower and then get me into a buy on accident, which looking at it in hindsight would have been a bad idea. But would have been deviating away from the rules, right? Would have been a reckless trade, which doesn't count as a winning trade. Even if you make money on a trade and it doesn't follow the rules, that's not a winning trade. That's you went to the casino and the market let you have a little bit for now. Not sequential, but we took January 2nd on the S&P and NASDAQ, but not the Dow. True, but okay, here's the thing. And I want to go ahead and instill this on early into the group. If you ever, and this is going to help a lot with this thing called cognitive bias. If you don't know what cognitive bias is, it's this thing that happens in your mind to where if you want to have a reasoning for something, you're going to find a reasoning. Regardless if it's logical. But here's how you counteract that. Think of it like this. Think of it in the series of 100 trades. If you're ever looking at something in hindsight, like even today, for instance, yes, there's a cracking correlation with this particular low in the Dow that isn't sequential. Okay, let's take that and imagine that over the span of 100 trades with that exact same criteria. Of those 100 trades, how many of them do you think would actually be profitable? I've been seeing the same two people type for a little minute now. My internet go out again? Can you guys hear me? Okay. Using the same logic, yeah. Non-sequential SMT with some random low on the Dow. Over the course of 100 trades, how many of them do you think would actually turn out profitable and work out in your favor? Out of the 100, probably very, very, very few. Exactly. So that's how you filter certain things. And you don't let your own mind be like, oh, how did I miss this? How could I be so stupid? When in reality, if you take that exact same way of thinking that you drew that conclusion with over the course of 100 times, you wouldn't be doing too well. Yeah, clearly, clearly, clearly it was this. That was a pretty funny time. Notice how we'll go to these up here. ES, Nasdaq, and Dow, Dow, and RTY. No, I don't use Russell. Used it once for about a week, never again. That's just adding more to the puzzle. Think about it like this: the more you add, the more noise you're likely to see, and the more of a chance you'll see something that's not really there. Yes, it's good to have multiple things in confluence, but there comes a point to where it gets to too much. And you either one, start seeing things that aren't there, or two, just miss out on too many opportunities. Join late. Can you summarize your view on the market right now? I'm going to ask you, what do you think is going to happen? Higher? Interesting. Stuck back within the range. Need more information. In short, in summary. Two 4-hour fair value gaps. The solution is 6-hour fair value gap. In this case, if we have two 1-hour fair value gaps, we scale up to the 4-hour. Exactly. Everything is fractal. Are you not scared to wake up and see crazy things happen because of unusual movement? I mean, it can, but as long as risk is managed, right, you don't care. I sleep just fine at night. Zero cortisol spikes. I know at least one of you got that reference. Notice you trade, or the trade you took today was whenever it first swept Asia high. You were in a 1-hour gap, also saw 90 minute sequential SMT. But one thing that stood out to me was that Asia high getting swept. Is that something you like to see happen in a gap? A previous session high getting swept, or a previous session low getting swept? Yes. That can be a good thing. It can be like a liquidity grab. But that was purely coincidental, right? I already had that limit order set before this high was printed. For the people that aspire to be short-term traders, you'll realize and you'll understand a lot of the things that you learned in the past was false. And it's not really how you achieve super great precision. Because especially in the ICT space, what you're told is okay, once this happens, then you wait for this, then you wait for this, then you wait for that, then you wait for this, and there's so much waiting and there's so much of this, just these extracurriculars involved, right? But as long as you can understand, does price want to go higher or does price want to go lower? It's boom, you got it. If you can, like I said, like the formula's right here. You can take this formula, find one trade per week. I'll say about 80% of the weeks throughout the rest of this year, and double your account with just this right here. if we were to fill that gap on one of the indices and a fair value gap cracking correlation form, and then a decline would be possible. That's possible too, but not necessary. And that leads back to what I was saying about, you know, 10 different things needing to be in confluence. It's just there comes a point to where it's not necessary, right? You have a key level, that's your outline, frame the move around that, frame your stop loss around that, target unsymmetrical liquidity. You know, that's it. Where did you put your stop for that 1 hour gap trade? We'll talk about it later in the year. If you've been with me for a while, you know all of my trades are quite literally this right here. All of them. And this year you're gonna understand a pretty cool trick that helps you in understanding how, you know, deep price should retrace into the gap and where you should put a stop according to it. And also for the newer people, don't worry. I'm gonna start calling these gaps ahead of time in the future. We can ask the 2025 people that were here. How many times in 2025 did I say, okay, we want to see this gap get respected and then have price continue in a certain direction? For the 2025 people that are here right now. At least once a week. Yep. You'll see it. It'll happen. Keep in mind, it's only week 3. Why 6855 for the limit? Well, if we look, we can see the midpoint of this gap is 6855. I think you can watch ICT, although you don't really need it, only after understanding TPDs and PSPs. You could, if you wanted a really, really, really in-depth understanding, but I haven't personally watched ICT in like 2 years. And now looking back, it's pretty laughable. And that's no disrespect to him, but if you can frame everything for everything in the market, it's just there's going to come a point to where it becomes a hindrance. Is Space your brother? If no, how did you clone yourself? No, Space is somebody I met whenever I was about a year into trading. And he asked for help. He asked me to teach him a few things, put him on to futures, put him on to the basic general things, and now here he is. But notice how whenever you see me post a trade, he's in the exact same trade. All right, that's not a coincidence. From your teaching on his own, you know, that the reasoning behind that is to show that nothing is, you know, being quote unquote BS around here. Because nowadays it's so easy to fake things and fake entries. But if I have somebody else beside me, I'm telling them the same trades as well, and then they're posting the exact same entries, you can't deny that. You know, he does his own trading as well, but whenever you see us in the exact same trades, right, it's not coincidence. Bit of a personal question, but what was the first thing you did when you got your payout? Put it in the bank. Didn't touch it. I used to be a big, big, big money saver whenever I was younger. I was in that short with you too. S&P strongest for downside. Yep. And even the 2025 people, taking the same trades as well. When I didn't even tell them to take those trades. It's crazy. Hookers and blow. Did you rush and just trade everything at first whenever you learned how to do this? No. You'll have certain periods in your trading where you just don't want to do anything at all. And you're completely fine sitting on your hands. Now, in the beginning, like very beginning, I think everybody goes through that phase where they just, I gotta do something. If this market's open, I'm clicking a button. I think everybody goes through that, but over time, you kind of get that out of your system, and you really see things for what it is. And there's this thing that'll happen as well. I mean, it doesn't have a name, but we'll just give it a name real quick, but I'll call it quote unquote mind canceling. So, mind canceling. Hopefully, I spelled that right. I did. Mind canceling is where any trade that doesn't follow rules or criteria automatically equates to loss. Which we'll give it a moment to load pop up. The ghost is acting up again. There we go. But any trade that doesn't follow the rules or criteria automatically, in your mind, you should cancel that trade out and think that's going to be a loss. That's going to take place. If you see something, it kind of looks off, or you see something and it's very discretionary and there's really nothing backing it up, then you'll mind cancel it. You're like, yep, that's going to be a loss. So you'll flip the paradigm from, ooh, I see maybe a little bit of something here, so let me get into the market, or let me get into the market, see what I can take. You'll flip that and you'll be like, oh, nothing is really tipping its hand right now. So if I were to click a button and take this quote unquote setup that's here, it's going to automatically result in a loss. The man that I saw making the most money on trading put the least amount trades I've ever seen. Yep. It's usually how it is. I'm excited for later this year though. Later this year it's gonna be fun. We're gonna have a fun time. What's the month you hate the most? It's probably gotta be August. August tends to be very, very slow. Fun for later when? I'll keep it short and say every other QT trader, or really anybody in the ICT space that thinks they know about this stuff, and especially the ones that have ripped off a lot of the things that I've put out there, we're gonna run them out of business. some people are going to get called out later on this year. That's going to be a fun time. If you can put two and two together, then you see where I'm going with this. Not band for band, but I'll say return for return. I'll give you guys a hint. Somebody asked a question about something very particular a while back, and the answer was Iron Maiden. But with that being said, we've already been here for 40 minutes, so we'll go ahead and call it that. I'll speak with you all again, or tier 3 people. Speak with you again tomorrow morning. So good luck and enjoy the rest of your day.